Good afternoon, everybody, and welcome to this edition of our ASX live market analysis. My name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia, and it's a pleasure to be with you as we delve into the depths of your Aussie portfolio this time around and try and see what we should keep, what we should turf out, and maybe add a few new ones. The format today is pretty simple. Over to you. Find the Q&A window somewhere on your Zoom session. If you're following me on any of the streaming services out there, could be YouTube Live, could be Twitter, could be Facebook, could be LinkedIn. Any way you can type it in. I've got a bit of software here that is generally pretty good at getting me your requests, and then I've got a bunch of other requests here which have come through during the week through various channels. Apart from that, let's head over to the charts. If you don't know how this works, if you're a newcomer to Ask the Experts, I'll give you my best technical and fundamental reader. I just happen to have the NASDAQ up on screen because it's on the top of my watch list here, and my watch list up on this side here. I will comment on that because we can see it on screen. I'm a little bit concerned about the rally from January. Concerned that it is losing a bit of steam. I don't think all is lost, to be honest. I think we're okay in terms of we haven't completely given up the ghost with our long-term trend zone. I was going to call it an uptrend zone. It's not an uptrend zone yet. It's amber, so it's indeterminate at this stage. Certainly, if it would start to converge and then head towards green, that would be very good. But we want to see some support here, some dynamic support. We're seeing elements of that. Two very strong candles through here, so that would be obviously Friday. What's today's Tuesday, so Thursday, Friday, and then Monday not as great. But I think we're okay. Let's just say okay. A lot of trends at the moment going sideways. We're going to see today, amber on the long term, amber on the short term. Apart from that, the price action is not great. Overall probably lower peaks and lower troughs. So let's see how we go. Where does it all come undone? Look, I think beneath that low there, so 11,273. Don't want to see it close beneath that. That would be quite scary. Certainly beneath 11,069. I think we are rolling over again into another phase of the bear market, dare I say. But huge, sort of data week this week. Obviously, we've got non-farm payrolls coming out in the US, and then we've got a speech from Jerome Powell as well. Not to mention, of course, locally here, we've got our RBA cash rate meeting decision coming up in just over an hour, I think, hour and a half away from that. Expecting 25 basis point increase. Aussie market looks stuck somewhere in the middle. You can see long-term uptrend. Well, that's great. At least we have one. We can also see, no surprise here, that the dark green zone is supporting prices. That's important. As long as we stay above 71.93 and that dark green zone, I think we're okay. The candles over the last few sessions are actually very solid. Very small reaction today to overnight moves weren't great. So I think we're okay here. I'll probably say more skewed to the upside on the Aussie market. There's a greater chance that we turn this short-term trend in line with the long-term trend, go back and test some of those highs. But yeah, it would require a bit of a push from all sectors of the market. The financials probably on the wrong side of the trends at the moment compared to, say, the resources, which continue to be on the right side of the trend. All right, without further ado, let's get to your requests. I might just do one that's come in from Nick from one of the Think Markets clients first. They obviously get preference in today's spots. We will go to JBH. I know it's a popular one anyway. Look, last time we looked at this, I reckon might have been around here. It was traveling pretty well. Unfortunately, we did get that cluster of black candles. They're always a great warning sign for you that something's not right in a trend. I'm not saying any one of them in isolation would have been enough to say, oh, I need to get out here and take some profits. But, when you start to consider, obviously after the first one, that's okay. Second one, third one, fourth one. But once you get to the fifth, the sixth, and the seventh ones, I think you're starting to think, well, maybe this one's not going as planned. And that's the candle there that kind of does it for me. This big upper shadow, we tried to rally. You can see we tried to bounce off the short-term trend zone here. That's that shadow. The lower shadow means demand. And we expect the demand to kick in here at the short-term trend zone. And then it did. You look at the start of this candle, it actually started to follow through and create, at least at the open, a white candle. So we're talking about, let me move this around, that one there. So that one there, just so we all know we're on that one. And then it got wiped by the close. So that is the one where I go, you know what? I think I'm going to have to take my cues from the market here. It doesn't matter what I think about JBHifi, and just lighten the load a little bit. And then we do get your little pattern here. In fact, it is just in here. We get a little lower trough. You can see that high, higher low. and that creates a little peak. And then what that also does is gives us this little area through here where we can start to say, well, if I close beneath that low, then I need to start to take some more action. I'm not saying you would necessarily have got the best price of the day. You could have got the worst price of the day there, but just for how the theory runs, minus a third on the break beneath that trough, and then the failure here I think is another big problem. So the old point of demand, so this is a POD, did indeed act as a POS, and that's generally your cue to get out there your final third. So in summary, based upon my sort of thinking, I'm not saying it's the perfect case study. You might not have got the best prices there. I agree. But just in terms of understanding the shape of the chart and how that relates back to demand and supply and how that demand and supply is changing, because through here, we're pretty good, right? Demand is greater than supply, nothing to worry about. But once we see that cluster of black candles, we're starting to think, okay, well, supply is increased. So we've got an increase in supply, which then leads to demand equals supply, which equals equilibrium, right, through here. And now really, once you get to this stage, you have to say, well, supply is now greater than demand. And do I want to be owning a stock where that's the case? So buy, hold, sell, it's pretty tough for me now, isn't it? I buys off the table. I can't buy it here. And a few people say, hey, JBHifi is really cheap here, Carl. You should think about buying some low 40s, that's usually a good place to buy. And I say, look, maybe. We'll look at the valuation in a second, but all I can say is that the trends, the demand and the supply dynamics are not screaming to me that I should run out and buy it. Could I hold it? Look, if you didn't exercise all of these exits through here, this is your pressure zone. You don't want to see, in fact, it's almost today, it's looking like the wrong candle in there. So the candles you don't want to see in there are these ones. These are going to be the killers again. So let's go that one. And that one, right? And see they'll be filled black like this. And then the buddy of that candle's best buddy, not our buddy if we're long, but that candle's best buddy. These are the supply. So supply, come on, that's supply side, all over the place now, side candles. There we go. And we also call them our supply buddies because you tend to see them together and clustered in trends. So if you saw those, Tanya, in that zone there, and why that zone specifically, because we've got the short-term trend kicking in, right? So on the way up, the short-term trend zone should act as a bit of a buffer, something that holds prices up, right? It did it just a little bit there. Certainly did it through here. Yep, sometimes it slips through, but on the way down, it tends to resist. So if you see any of those supply side buddies in that zone, I think JBHifi is in big trouble to head back down here. And failing this low here, which is 41.58, then really it has to go into sell territory for a move potentially all the way back down to these lows here around 38. So I wish I had better news for you. Buy 0%, hold is growing very tenuous, and sell, well, there were some opportunities there. Let's have a look at the valuation for JBH. And we're heading over to our Refinitiv Icon screen. It's a product supplied by Thomson Reuters, which is one of the preeminent global data providers. What they do is they aggregate broker ratings, broker targets, and broker forecast data for various global stocks, really not just Australian stocks. And we can see here, we also get historical data. So that's data that doesn't come from the broker, that's in the bag. That's what the companies have reported. And then we get the consensus data, forecast data from the brokers. Now, JBHifi, make sure we've got the right financial year end. That all looks pretty good to me. We can see we've got 15 brokers covering JBHifi. Their highest target price is 75.20. Their lowest is 37, which is a wide range, but their average would allow for about 10% upside from the current price. So on that basis, if you believe the brokers, JBHifi is attractively valued at current prices. Now, in terms of their ratings, very polarizing. In fact, one of the most polarizing companies I think I've seen on the ASX. Polarizing, I mean, brokers can't make up their minds. And if the brokers can't make up their minds, I think it reflects really well back on that chart where we're looking at some of those trends. We're saying, look, the market can't make up its mind. It's not saying I must hold on to JBHifi at all costs because it's the best stock to be in and I must buy more of it. That would be very little supply, a lot of demand, price going up. It's, well, I'm happy to supply here because I'm not sure about it. And I'm not sure if I want to demand either. That's what we're seeing. It's evident in the chart. 2 strong buys, 2 buys, 5 holds, 5 sells, and 1 strong sell. It's pretty rare actually to see the ratings actually skewed to the sell side. Let's head down to the EPS line, and in this line here, this row here, I'd like to see, bottom left, top right sort of growth. I can forgive a bad year in 2020, 2021, because we kind of had a pandemic. Not a problem here for JBHifi because we stayed home and upgraded everything electrical. So that actually does look very, very strong. And looking forward, we can't say the same. So we're saying that JBHifi is really has ridden the wave, and on the other side of that wave, we're seeing pretty substantial, to be fair, a pretty substantial contraction in earnings. So minus 8% compound annual growth rate over the forward-looking period, which is the next 3 FYs. Then we come down to the valuation side of things. And whilst the rest of this spreadsheet is supplied by Refinitiv Icon, this part of it is supplied by me. And it allows me to get an idea based upon how I feel about the stock, whether it's good value or not. Okay. So this is what the brokers think. That's up to them, and this is what I think. Now, I've got a dynamic forward-looking PE, and that is based upon the broker's forward-looking consensus PEs, and I take the median of that of 12.4. And then I say to myself, well, is that a fair PE, a fair hurdle PE to hold JBHifi to account with? And I look in the past and I say, well, over the last 5 years, it has been a bit lower, it has been much higher. It's probably not unreasonable given the historical PEs, and it's certainly looking pretty close for the future PEs. Risk level determines the discount rate I apply. So for a higher risk stock, I might jack up the discount rate, and we can see how it does actually substantially change the dynamics of the equation. So we're being more punitive with our discounting of future cash flows. I can't see a great reason to go against that, to be honest. The only way to make it higher and closer to the broker's target is to raise the PE. And I'll just give you an idea. The reason why I can't go any higher, the market average PE is 15, right? So if I went market average for JBHifi, that's not what I want. I want target. So I said the typical PE of the broader market, the All Ordinaries Index, is about 15. And typically the market's growing, somewhere between 5 and 10%. And that would be that would capture the entire bell curve apart from the last standard deviation on each side. Okay, 5 to 10%. Let's say 7.5% is the average. Okay, so if the average PE is 15 and the average growth rate of the market is 7.5%, would I pay the same PE for a stock that's expected to shrink their earnings by 8%? And for me, the answer is no. Okay, so that's why I'm happy to keep the broker's PE, but I certainly wouldn't make it any higher because I don't think it deserves it. So my target for JBHifi, or my fair value target, is 38.34, which is a substantial discount to the brokers, but I think more reflective of what's happening here, okay, and also more reflective of what's happening on the chart. And sometimes you find that this gives you a more honest valuation than this, because this tends to be stuck at a higher price if the price of the stock is coming down, because brokers don't like to look wrong. They want to keep their price targets at those levels, hoping that the price of the stock goes back up, so they don't appear to be wrong. I'm happy to be wrong. That's just part and parcel of the business. Okay, that was JBHifi for Tanya. Let us head over to the Zoomers. And Hanelli saying, morning, Carl. Morning, Hanelli. It is still morning my time. A bit risky, but I'm considering AS2. Well, let's help you consider that one. Let me do a couple of things first. There it is there. Let me go back to my default zoom. It's really important before we do our next batch of technical analysis that we go back to our default zoom. Okay, I don't want to get stuck looking at the fine detail because that's where I was in the previous stock before I look at the big trend. Okay, it's important to start with the big trend and then drill down to the fine detail. And you can see, Nelly, we've done some scratchings on this in the past. It's not bad. Look, it's not bad. Our long-term trend is up, so that is important. That's the first part of the puzzle. That's that long-term trend there. We can see in the past we said we needed to get a certain type of price action, and that would make it more attractive for a buy. Whether that occurred or not, I'm going to let you decide. I'm happy for you to let you decide. I would say this candle here is not convincing. I would say if this candle, this one here, by the way, was a full white candle up, you know how I operate, that's where it would have been a third. But I don't think that candle was convincing enough to get you in. And this is where we can see how trends, both long-term, short-term, and then price action, then candlesticks all come into play to give you better entries. And I don't believe that occurred. That's my opinion, and I'll let you form your own on that. Okay, now I'm going to delete all this because I can barely see what's going on. Okay, now I can do some fresh analysis. Okay, where's the price action? So I'm looking for a lower high and a lower low. So we're looking candle by candle. All right, I know I don't talk about this, but it would take me a day to explain exactly how you do price action analysis. But there's a high for the candle, there's a high for the candle, there's a low for the candle, there's a low for the candle. All right, so we've got this thing called a short-term downtrend equals lower highs and lower lows, right? Then we've got short-term uptrend is the opposite, higher highs and higher lows. Let's just go lows. Okay, and a peak, so we call this a short-term peak, by the way, short-term peak equals the highest point between a short-term uptrend on one side and short-term downtrend on the other side. And then we say a short-term trough, because there are also medium and long-term troughs as well, is the lowest, obviously, lowest point between a short-term downtrend this time on the left and short-term uptrend on the right. And if you've got those definitions, right, it now becomes very easy to see and understand how I can do this. That one, you've got, it's a little one in here, but then that comes down to there. That one supersedes that. Sometimes you get some tricky ones you're just going to have to deal with. So I reckon out of all of these, you've got inside, outside, some tricky price action there. That's how I would draw that one. Okay, and then we're heading back up this side because we've got a higher high and a higher highs and higher lows, and we don't know. We do have a short-term uptrend in place, right? But we just don't know where it's going to end, right? So there is a short-term uptrend in place, STUT, but we don't know where it's ending, okay? So to answer Haneli's question, and Haneli's saying it's a bit risky, I do think it is a bit risky, and the reason for that is we haven't shown the price action coming back the other side. So I want to see, before I get invested in this, I want to see at least something. You might see it top out there because that's the last point of supply. Maybe a little bit of a pullback, just a candle or two even. Okay, so we're watching, say, this level here, right, as a past point of supply, potentially acting as a future point of supply. See how we respond there. And if the demand gets its act together and we start to build our points of demand, right, that will tell me that we have, in fact, I'm going to get rid of that one now. We have building demand in the system, right? So we want to see the building demand, and we want to see with a move above, right, with a move above that point of supply, we are now in a phase of supply removal, okay? Supply removal. All right, so building demand and supply removal, tick, tick, and it's somewhere probably around here, Nelly, that I'll get interested in it. And I think what's great about this thinking, this methodology, is I don't think we're going to have to pay a whole lot more. I mean, we might end up paying 60 cents, right, instead of 57 cents. Well, whoop-de-doo. If it's going to $1, who cares? But think about how much confidence we're going to have that demand is coming back in. And why would you want that confidence? Why would you want to be confident that demand is coming in and we're now removing supply? In fact, there's so much demand coming in, it is actually removing the supply in the system. Why put to you, Nelly, there's a bunch of supply out there. And supply is consistent, it's concerted, it's motivated. How do I know that? Just look at the trend, the medium-term trend through here. Okay, so yes, I agree. This is good. And these two candles are fantastic. But I think there's more that needs to be done here to give us enough confidence to say, you know what, this deserves my money. So it's warm. If I had it, I'd hold it. If I didn't have it, I wouldn't buy it though. Not yet. I think that covers all bases, doesn't it? Okay, let us keep moving. I won't do Askari Metals on the Thomson Reuters Refinitiv Icon spreadsheet because it won't have any broker coverage. I guarantee it. Trust me on that one. Okay, let us head to some of the streamers, and we're going to look for Leonardo. In fact, Ibeth, I think is how I pronounce that. Codan. Ibeth got in first. Let's go to Codan. Let's go back to a default zoom. That's all. Let's go normal. Yep. And look, it's very flat. Probably I can do this one quite quickly. You can see the long-term trend is still down. It's still down and still resisting prices to the upside. So that is a big problem. We want to see it get above this trend, right? And do something like that. So until then, I'm reluctant to call it a buy. If it had the most spectacular everything else, price action, candles, short-term trend, I'm not going to call it break a rule, but bend a rule and go long before that trend has changed. At the very least, I need to see it in the trend zone and holding above the short-term uptrend zone, which it is. And I think it was probably fine or prospective up until this candle here. And this candle here is a big problem for me, okay? It engulfed the previous candle, it engulfed the candle prior to that, 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 engulfed the candle prior to that, engulfed the candle prior to that, and I reckon engulfed the 3 candles prior to that as well, maybe just. So you get where I'm going with that. This is an important supply side candle, okay? So these are, I call, when you see those, they are the fingerprints, of supply. And my question to you is, do you want to mess with that to buy in the face of that supply? Look, today's candle's encouraging. That's the best I can go. This is an encouraging candle, but it is a live candle, and it can change. We can see a little bit of a shadow creeping in here to say, you know, people buy the bounce on stuff, don't they? Oh, the Codan looks cheap compared to yesterday's price. So they come in and buy thinking it's going to, you know, it's cheap. It's guaranteed to go back up. And then the supply says, no, this thing is like, didn't you get the message yesterday? Did you get the memo? We're selling this thing. And it creates that shadow. So I would say if this closes towards the lows of the day, you've got one almighty sell signal. Forget hold, forget buy. If this closes towards the lows of the day, you've got an almighty sell signal. And what I'll do is actually click update here on my data provider. So my data provider gives me an update 20 minutes past the hour, each hour intraday. And that's all I need. I don't need live data. And if you're trading on live data, I suggest you don't, because live data will confuse you. It will cause you to jump at shadows and do the wrong thing, okay? I prefer end of day data. After the day's done, I can't do any more trades. I sit down and I look at these things clinically. And if I have emotion, I get that out of the way at the start. What I can't do is go and trade on that emotion. Why? Because the market's closed. I'm looking at this end of day basis. If I look at something in the middle of the day and it hasn't gone my way, I have emotion and I can go and trade on that emotion. And for me, that is a bad sign. We just saw what is also a bad sign is we just saw the shadow grow there, which it indicates to me we are actually failing here today. Look, if I'm wrong, today's still open. We've still got a few hours to go. If this closes with a big white candle to take out the previous black candle, then you're probably fine. Apart from that, I think this looks very, very shaky indeed. Well, it's not a buy, so I don't think we need to look at Codan's fundamentals, do we? You know, let's say if we find things that look good on the chart, let's then go check out the fundamentals. Let's not waste any more time on that than we need to. Let's head over to some of the Facebookers now. These are all requests from during the week. I've got Jackson with MCL, which sounds it. I love the name, MightyCraft. I don't know what they do. Let's go normal. But I would suggest whatever they're doing, it's not exactly capturing the market's attention just yet, is it? It's having some problems getting enough demand in the system, like capturing enough attention to stimulate enough of that attention into demanding the stock. And for the people that own it already, that have that it has already got their attention so much so that they bought it, there's not enough good stuff going on in the fundamentals to cause them to hold onto it when the market's a bit lousy. You know, when the market's a bit lousy, they say, look, nothing's happened today. I just want to get the hell out and go do something better with my money. So it feels like there's plenty of supply around when there needs to be, and there's just not enough demand around when there needs to be. It's very sideways, isn't it? We've got a long-term downtrend, I think, fairly safe to say in place. The short-term trend is down. The candles are predominantly black. What does that tell you? So even when it has an up day, it's a down day. It might have edged higher in the day, but only because it closed way off its highs. And that just reeks of supply in the system. It just tells me that there is plenty of latent supply in the system, basically just waiting for any up movement, which equals excuse to sell, right? Sell more. And if you've been following the stock for any time, you probably watch it intraday. You probably watch the bid side and the, haven't we done that? We're watching, oh, there's another buyer just come in line 3 on the market depth. Whoop-de-doo. Please stop doing that. It will drive you crazy, and it is the worst thing you can do for your trading and your profitability. Okay, stop looking at market depth and stop watching the market when the market's open. If you don't believe me, try it and see how much better you go. Oh, but Carl, I'll miss all the opportunity. No, you won't. You'll have all the opportunity you need. Okay, you might not have all the opportunity you want. You'll have all the opportunity you need, and you'll have cleaner, better signals upon which to make your decisions. Buy, hold, sell. I can't get to a buy here, obviously. Trends are down, candles are all black. Price actions negative, lower peaks, lower troughs. The only question is if I can get to a hold. And I'm not sure if I want to hold this one either, to be honest. So what does that leave behind? Unfortunately. Okay, back to the Zoomers for William TLC, which I know is a really nice chart. And I'm certainly happy to hold this one. Would I buy it? I can't see any reason why you wouldn't buy it. It has extended a little bit of a ways, but that's okay. There's no reason why I can't continue to buy that. Take a medium to long-term unit is probably fine. I don't have a long-term trend. It hasn't been around long enough, but I can say the price action is fine. Higher peaks and higher troughs. Is it a bit overlappy? A little bit, but I don't think that's a deal breaker. The candles are fine. So William's saying TLC, although the low is below the last peak, looks good to me. What do you think? Well, yep, I still think it looks pretty good. He's saying the second, so what William's commenting on is the price action. And as I said, William, yeah, it's not perfect, but it's not terrible either. So what William, I've no doubt, is commenting on is he's saying that the last trough, so if we go T0, call that T0, which makes that T1. Right, if you're not sure, then that's going to be T2, and do our P's as well. So we go P0, P1, P2, and these P's and T's just go back to the beginning of time, really, don't they? So, and they won't change. They're static, and that's what's brilliant about them. You know where they are. I've given you the rules on how to find them unequivocally, and they don't change. Okay, so William is saying that the last trough is slightly lower than the second from last peak. There's the last peak, there's the second from last peak, and he's right. But I think it, whilst it did start a bit lower than that, William, I think the candle is just so convincing, isn't it? There was so much demand in the system there. I'm fine with it. I'm okay with that. It's all good. I'm curious now. Is it something we might be interested in buying? Let's quickly head over here and punch in TLC. I'm not sure how much broker coverage we'll have, William, because it's fairly new. How many brokers? Well, more than I thought. 11 brokers covering this one. They have a high target of $6, a low of $3.90. But actually saying that at the current price, the stock is somewhat overvalued by 4.7%. No strong buys, but 7 buys. That's impressive. 3 holds and 2 sells. So this is actually pretty polarizing as well. Clearly, there's no historical data apart from the last financial year, which is the first financial year of operation for TLC, because it was obviously split from Tabcorp. But I do want to see, and these are going to be all forecast numbers, bottom left, top right here, which it does appear to be so, but very modestly so. So we're looking at about market growth on this one, about 7% per annum, maybe a smidge less than your average year, which means though we should really probably only be paying about 15 times earnings for it, and that would make it crazily overvalued in my books. Okay, so what we've got here is a situation where obviously this is ignore that, unable to blah blah blah, so that might even be just the data from the last stock. It just doesn't, if it can't find these cells, it can't change the rest of the cells, so that's old data, forget it. We just don't have it. Looking forward here. Okay, so the PE, what's the right PE? Not 15. In fact, it's probably less than that. It's just, yeah, we're just not going to be able to get a sensible valuation. It's not 28, that's for sure. Okay, so where does even? That's right. Oh, sorry, I was looking at the wrong line. I was looking at the PEG, which should be about 1, by the way. But it's way higher than that. Here's the PE here. Sorry about that. That's why that's 28. and I'd only be prepared to pay 15. So I'm looking for red flags here, and this is a bit of a red flag for me in terms of the valuation. Look, happy to trust the chart. I'll defer to the chart, but I can't say that TLC is a screaming buy based upon those broker numbers. Okay, from King EQR today. Let's check this one out. EQR, big, yeah, it's had a really good run more recently. So we're talking about EQ Resources, bit of a specky here. Some volume has come in. I'm not sure if that's enough volume for me. I mean, look at that. There's some there, but it's a little bit ho-hum. We are banging up against some supply through here, and we're testing it. That's okay. That's good. It's a good thing. We're testing the supply. We've got a bit more there, and then I think we've got a great whack here. So I think in terms of the dash, I'm going to say for the most part, the dash is probably done on this one. Unfortunately, King. I'm not sure if I'm happy by here. And he's got some other notes here. Good little move over the last month. Don't remember anyone ever talking about it before. Got his finger on the sell button, so he's already in it. Okay. Yeah, I think you can sell some on the basis that. So this is what I'd be looking to do. You can do whatever you want to do, King, of course. This is all general advice, but on the basis of a couple of things. Okay, so there's a point of supply here. Okay, it's our first test of it. Might take a little while to get through. Not to say it can't. This candle here is not ideal. Okay, it's not a sell signal in itself. Make no mistake. This candle here is not strong enough by itself to cause me to want to get out. And really, neither is that one nor that one, even if I blended them all together. They're still not so awful, right? But in combination, those three candles with this zone does make me feel like I want to go minus 1/3, okay? And you're getting 6.3 today, so hopefully that's a nice bit of profit. But notice, after that, I've still got plus 2/3, okay? And then I would just simply wait and see what happens with subsequent price action and candle signals to tell me what to do next. Okay, I'm happy to hold the other 2/3. We may go up and have, who's to say? You might say, oh, Carl, the next level is not that much higher. Why hang on for it? And I get it. I'm not disagreeing with that either. But I'm happy to give it a go because who's to say it can't just blast straight through? Maybe it will. Otherwise, the candles are very strong. And the volume, once we zoom out, there's some of the old volume there, the big spikes. Volume's looking a little bit more interesting there, a little bit more. Happy holder on this one. Kind of misspoke there, didn't I? If you haven't already, I'd be thinking about minus 1/3, but happy holder on the rest for you, King. Okay, let's head back to Hanelli. I'm going to skip that one because I've already done one of yours. Let's head to Damien, S32. If we have time, I'll come back to that one. Damien saying thoughts on chart would be appreciated, no worries. Long-term trend is good. That's fine. However, it's very flat, isn't it? I mean, it is a very flat trend. And let's go back to our default zoom. That does confirm it's a very flat trend. Short-term trend is okay, not great. Price action is okay, not great. So we are a bit of a mess through here, aren't we? Is it clean price action? No, it is a mess. Is it good price? No, it's not good price action. It's lower peaks, lower troughs. And then we get this big spike up here. Why? I don't know. A single Chinese data print, right? The PMIs. And lo and behold, where does it take us to? I mean, does it go vertical? No, it just takes us straight back up to an area where we must expect, not should, but we must expect will act as supply. Okay, so it really is all about what happens here. Everything has gone to plan so far, right? Now, we're coming in at a point above that. We're expecting that this should support. If it doesn't support, there's your red flag, okay? If it does support, we should push back into this point of supply, and it will be our second test, right? So this is our first test. We remove some of the supply there. We're more likely to get through on our second or third test. It may take a third test before we get through it. I don't think so. It doesn't look like it's too huge, too, what's the right word there? Too sinister. So yeah, this more work needs to be done for a buy, certainly. I'm not at a buy, but really even to confirm your desire to hold it probably also. And preferably we do see some high peaks and high troughs move back in. So look, all of this up here would be fantastic. Note $5 is probably a little bit of an issue, but I don't think it's going to be a major one, simply because we're coming back at it. We're not testing it for the first time. People are familiar with paying $5 for South32 in the past. So that would be your best case scenario, Damien, and then it would allow you to hold it and potentially add, and I would wait until we're above here, really. So plus 1/3 above there. Now that's your best case scenario. You know what candles you need to see. Your worst case scenario, really, if we start to break beneath here, let me undo that one and draw that. So if we start to break through there, that would be a worry. If we came down and then did something like this and broke through there, you're in big trouble. Okay. Can I hold it? Yeah, I can see a reason to hold it because the long-term trend is up, short-term trend is up. The recent push up is encouraging. Would I buy it? No, I can't. I've told you why, and I've told you what I would need to see to buy it. Would I sell it? No, I wouldn't, but I've told you what would happen to cause me to want to sell it. So I think that's a pretty comprehensive overview of that one. If you're wondering, let's have a look here on South32. And I'm expecting we're going to see plenty of contraction there in earnings because that's what brokers are thinking about mineral stocks, that the prices are going to come down, not so much their operational performance in their production, but the prices of the minerals they're producing will probably come down 27% in FY26 to give us a -5% compound annual growth rate. And it doesn't mean we can't buy stocks that have shrinking earnings. It just means we need to get them at the right price, okay, at a really good or really low PE. I shouldn't say good. 16 brokers covering 6 on the high, 450 on the low, 7.6% upside on the average, 2 buys, 9 stroke buys, 7 holds. So brokers are genuinely quite positive towards this one. Bottom left EPS, hardly. In fact, no. Very lumpy and very cyclical, as you would expect for a cyclical company, okay, whose earnings ebb and flow with the business cycle. In terms of the PEs, anything up to 87 down to 6, this is going to be a very, very hard one for me to value. Looking forward, somewhere around about 9 seems to be about right. And given that the average for the market is 15, right? And that's for about 7.5%, 8% growth, probably 9 is sounding about right for 5%. Yeah, I don't think you want to go any higher than that. Let me just check the historical, just for my reference. Obviously, we don't want to pay that. Let's go dynamic for everything. Look, even if I was that generous, I'd say, based upon what I feel, for that growth, it's still overvalued. Even though you're getting a bit of a discount on the market PE, I still think this one's overvalued. And I don't think, despite here, how about this? There's so many buyers out there officially, right? Yet the chart is, a little bit flat, isn't it? So all those brokers calling buys, well, where's the buying? I reckon this one's a bit overvalued, and I reckon that's kind of being reflected in the chart. That's just my view on it. Okay, let's keep moving. Let's head back to the streamers here. And we've got Silex. Actually, I missed one there. Yancoal from Leonardo, which looks fine. Leonardo. This one's super quick. Short-term trend up. Price action's not terrible. Candles are okay. Long-term trend is still up. It's still holding this and this. Buy, hold, sell. I think I'm a holder. I shouldn't say I think. I'm a holder. Am I a buyer? No, it's not a buy, and there's so much that needs to happen for it to become a buy, because I've got supply through there, supply through there. I'd need to really see a test of this level before I got involved, and then even then, $7 is so close. In fact, my expectation for this is it's probably more likely to go sideways than anything else. You start to grow concerned if you start to see this sort of price action, especially in and around here. Yep, without getting to the top of that range first, and certainly beneath that range. I think all is over for coal. Okay, so holder, but there's probably better things you can do with your money as well. Let's have a look at Silex. Last time we looked at it, I think it was only last week, to be fair. So let us, that was the big picture, obviously. Zooming in now because I want to see the candles. Last week, we drew the face here and we said that there's really no reason to hang on to it. We really said that this big gap down is what we call our species-ending event. We said the reason for that is there's a whole heap of latent supply created by this move to a new high. Then even that candle with its huge volatility just really undermining the confidence in the trend from the people who have been waiting to sell. Let's face it, people have been waiting to sell for ages all the way up. And that kind of says, you know what, this is getting a bit dicey. I need to start to get out. And then there was some news here. I don't know what it was, and honestly, I don't care. But this gap here is the same as a black candle if you were to blend these two candles together, okay? So it puts people completely offside. You had so many people on the long side believing the story, and that's okay. We need true believers in the world, that it was going to go to wherever it was supposed to go based upon whatever they believed, whatever narrative convinced them of that fact. Now, there's so much doubt fear, uncertainty, you can't come back from that. So when I see that gap and then no response on the next day, really, it's a compulsory sell. And nothing's occurred since then really to change my view on it. I know we're here, but this candle is hardly inspiring. Tell you what though, if we did see some inspiring candles, and they're going to look like this, I'll tell you exactly what the inspiring candles look like. They'll look like that, but it won't be red. It'll be black and it'll be unfilled. So that and that and that and that, or I can't get that in the middle. So let's maybe do this. There we go, and copy paste, and the buddy of that candle is that one, and these are our demand side buddies. All right, you see those in and around here because we do have a long-term uptrend. I might start to get interested again. And you know what? If you see those, bring it up, ask my opinion. I'm happy to give you another opinion, but there's just so much water that needs to pass under the proverbial bridge until I can even consider that as a buy. Post cap raise. Those are cap raise. There you go. We did discuss that last week, didn't we? That's from Andrew. Post cap raise worth attention? Question mark is the statement, and possibly, but let's at least see the demand side buddies first to tell me that the demand's coming back in, and maybe we can get some of that heat and some of that excitement coming back into the stock. But let us not try and catch the falling knife until then. Philip asking, how's Lynas going? I know, a very popular company. Let's look at that one. Last time we said I would, it was clearly here. Okay, so last time we looked at it was here, and I would have said to you something like this. Hey, unless it can do what the green lines are showing, the green arrows, not interested. Did it do what the green lines were showing? No, it did really what the other green line has showed, which is more likely drop out the bottom of that range. So therefore, I would suggest there's nothing really much to do here, to be honest. In fact, buy, hold, sell, you're almost at a short. You're almost going short this thing, to be honest, because the last bastion of demand is about to give way. So there's your point of demand here, a really significant point of demand. And if that goes well, then we, as we say in technical analysis, look out below. And how far below will you need to look out? Possibly down to the next level, which is around here. So you could quite conceivably see Lynas printing, you know, like a sub 650. Could it bounce from here? Of course it could, but you'll need to see the right candles and the white candles before we could call it. Would I buy it here? Carl, damn cheap down here, Carl. Dirty cheap. You should buy some. It'll go back up to the top of the range. Yep. Okay. Leave it up to you. You do you. I'll do me. I'm curious now. I know this is not what I'd buy, but some people will say, oh, it's got to be ridiculously cheap. I don't know. Let's have a look. What do the brokers think? 1278 high target, 670 on the low, 982 is the average. The brokers with those price targets stuck at bull market mode are saying this 31.8% upside. You'd have to run out and buy it. I tell you what, who's buying it? Somebody's, if it's such a screaming buy, why is the chart going down so much? One strong buy apparently, four buys, 5 holds, 1 sells, strong sell. It must be all of these guys then. In terms of the EPS line, a bit lumpy there through COVID. I can forgive that one, but otherwise looking pretty good until we have a couple of years of very flat earnings. And then apparently it's going to just explode in FY25, it seems. Look, that's a massive number there. 34% is extraordinary. What would I pay for 34%? Well, I could easily pay 16, which is the dynamic all. And let's go dynamic F. It makes it even cheaper because, 7 is in there, 8's in there, 15's in there. Look, I think probably, well, I could pay higher, to be honest. It just, yeah, look, I'm going to say the spreadsheet's broken here. If you believe the spreadsheet, if you believe the brokers, this is absurdly cheap. But I wonder, and this is the thing about consensus estimates. They're not static, right? They change. So we could come back and broker 7 has realized whatever the news event for Lynas is, Tesla's not buying rare earths for their electromagnets anymore. And I'm not just making that stuff up. That's in the news, right? And they've gone, well, we update Lynas monthly. What's today's the 7th? Well, we normally do Lynas on the 12th, right? That's just when we get around to it. And then on the 12th of March, This plus 74% in here becomes plus 13%, right? Because broker 7, and then on 3 days later, broker 6 changed theirs and broker 2 changed theirs today. You know what I'm saying? This stuff can change, and this stuff will change more slowly than this right here. Okay, and this is kind of the message. All of that stuff in that spreadsheet, and you might go, oh, geez, Carl's got this great spreadsheet. It's got what all the brokers are thinking. So what? This is what the brokers are doing, okay? So they've already factored in that news. They've already factored in the fact that they're going to change a bunch of cells in their spreadsheet. Well, they've already done it, but the rating hasn't changed yet, and the price target hasn't changed yet, So just be careful with that. With those broker consensus numbers. Anyway, we should keep moving. How are we going on time? I seem to be behind time and behind answering questions. Okay, I'm going to do one from AJ. Let's go MNS here. I can do it very quickly. There's nothing to see here. Okay, sorry, AJ. That is what we call in technical analysis. Well, I don't know what other people call it. This is what I call it: a species ending event. And what I will do here, AJ, if you want to improve your investing, if you want to get better at this, okay, I'm going to give you some homework. Look at 100 charts. I'm not kidding, but pick any chart you like. I don't care which ones they are, but look at 100 charts and find big black candles like that, and tell me where. And just go, just three columns, right? So you have your 100 stock codes in one column, and then you've got, higher or lower. Okay, and let's just go whatever 3 months down the track, right? Tick in one of those columns, higher or lower. And I think you're going to find in those 100 stocks for those 100 giant black candles, you'll find that far more often than not the price is lower over that next three month period. So I'm going to tell you that if you see something like that, there's no reason to be involved. Apart from that, the trend was extremely flat anyway. I can't get to a buy on this, and I'm not going to look any further. Hey, I like what they do. Don't get me wrong. So these guys do battery technology. They're producing batteries, if I'm not mistaken. I looked into this one maybe a year ago, maybe 18 months ago. And yeah, it sounded very interesting, but that's a narrative, right? A narrative counts for nothing unless it's stimulating people to demand, and it's stimulating people who have the stock to not sell. Think about those words, go back in the recording, replay that bit of the recording 100 times. Okay, let's keep moving then. Let's go back to the Zoomers, and we've got IGO from John. I'm going to just do the Zoomers from here on in, so everybody on Facebook and streaming, join the Zoom session. I will give them a preference for a good reason, because they've gone and registered. But I have done a bit of a mix until then. We've got 15 minutes left, and we're going to go quick fire from here. So we'll discard the valuations and just do the technicals. Okay, so let's go IGO. It's under real pressure here, John, in some real trouble. It's at its last point, really, isn't it? Koshi used a really interesting phrase during the week when I was talking about Pilbara Minerals. I think I said I'm halfway out the door, and Koshi said, well, you're about to close the door. And I think that's my feeling on many of these lithium stocks. We've been closing the door for a while. So if you look at my analysis, it's covered in minus 1/3, okay? Doesn't matter what lithium stock it is over the last 2-3 months, okay? The whole turnaround of lithium has not been a surprise to us. Why has it not been a surprise to us? Well, because we look at macro charts, right? We have a look at charts like this one here, lithium carbonate, all right? The collapse in that chart. We're worried that lithium hydroxide is about to go in the same direction. But more than that, we just follow the charts of the stocks. And if we go back to IGO, you can see the predominance of black candles coming in, and big black candles. We're seeing lower peaks come in and followed by big black candles. We're seeing breakdowns of points of demand. We're seeing major points of supply. Now, not just simple points of supply, but major points of supply coming lower and lower. And we're seeing the rallies far more feeble, even when they do string together a couple of decent candles, far more feeble than the pushes to the downside. And I think beneath here, it's all over Red Rover, and that low there is 1276. Let's say 1275 or lower. I can't see a reason to still be owning IGO. And I can't see a reason to own it now anyway. But if you happen to be holding it, look, I will certainly pay absolute dues and respects to this candle and this candle here, because they are very impressive. And in fact, today's candle still is sort of perpetuating this idea that maybe it can rally On the basis of those 3 candles, I can go a hold. Where will it become a buy? And it could be. Okay, I might be wrong. It might not break through the bottom of that range and go down to $10. It might not. But to be a buy, you know what you need to see. There's some good stuff in here. We're trying to hold the long-term trend zone. It hasn't completely gone to pink yet, has it? It's still holding amber. 3 great candles. Probably if we can move back up here, we're back into higher peaks and higher troughs as well. Okay. Even then, I don't think I'm prepared to take a risk on it. Because this is just so convincing for me, and so is this. Okay, maybe it'll make you more comfortable in holding it. That's all it would do. What did I say? Buy, hold, sell. Hold on the basis of the candles. I'm not a buy, and I've given you where you would think about selling. Okay, I'm just curious now. I just want to do some of the other lithiums here. Ditto for PLS. Beneath that long-term trend zone, it's got to be lights out. I do feel that. And there's nothing, I know there's a dividend in here, but even if I add that back, there's nothing in here that's impressing me. This, I think, is very much in play. If it gets above, it'd have to get above 460, 470, even 480, with some really impressive candles and some really impressive price action to get me back even to a hold, let alone a buy. So I'm really concerned about that one. The other market favorite, Core Lithium. Oh, even when it bounces, it doesn't bounce. Look at that shadow. This is in place. This is in place. I cannot get excited about that. It would need high peaks, high troughs. It would need some fantastic white candles. And if all of these things occur, you know what? I'll be banging the desk for us to get in. Hey, that one's interesting. Liontown Resources. Okay, we're seeing something so different from everything we've seen everywhere else. This is super impressive. Okay, these are the sorts of candles you're going to need to turn my way of thinking around at the very least. And then what did we do? We didn't just stop there. We took out that point of supply. Wow. Okay, this one's in play for me. This is something I could consider buying again. If it was to close above that high there, 173, so 174 or better, I really cannot see why you wouldn't. I did minus there. Plus 1/3. I can't see why you couldn't do it, but you might get a better opportunity to buy. Let's say, because we're going to pull back here a little. Why? Because we've got a little bit of latent supply still to come in the system, I would say. But if you see your demand side buddies coming in here, okay, so that candle or that candle coming in here, then certainly I can add 1/3 in advance of breaking above 173. Okay, so this one, let's go 1/3. And I'm surprised by this. I haven't watched this for a while. I haven't thought I needed to watch any lithium stocks for a while. Okay, but this is the best one of the lot, in my opinion. Well, that we've seen so far, out of all 3 that we've seen. So if you see those demand side buddies, then in advance of that break above 173, I could do 1/3. But then also look up and understand where your supply zones are going to be, and make sure you can get good reward to risk on the way back up. Okay. I just want to check this one, because this one, as I said many times, this was my favorite chart. I think it still is. It's still very strong. It's losing some momentum. Do you need to exit? No, I don't think you need to exit, but I'd be concerned under there that the trend is turning. Okay. Let's do mineral resources. I know it's a part iron ore stock, and that's why it's rallied, because iron ore prices have rallied. I'm a happy holder there. I don't think you need to do anything crazy on that one. What would change it? Well, you know, we are seeing there's a point of supply there and a point of supply there. If it starts to move back down, it's not looking great. And certainly if it gets beneath there, you can see actually some minus 1/3 on this in the past. But okay, I'm happy to say it's a holder based on what I can see today. And I'm sorry if I'm forgetting your favorite lithium stock, Sayona. Well, it's limping up, isn't it? But it's not a buy for me. It's hardly inspiring. The long-term trend's okay. Short-term trend is eking out again, but the candles are not inspiring, and neither is the price action. Certainly can't get to buy. I can go hold on that one. All right, Tour de Lithium ticked, and I know I've ticked a few off the list here as well. Let's get to Ararju for ABB, which is down today. That's disappointing. I know it was looking good a couple of days ago, but I'm a happy holder here. I don't think that's sinister enough. And I did say on Ausbiz on Friday, look, take a medium to longer term view, but I think it has turned the corner. But I said medium to longer term because I do expect you might see a little bit of a pullback just into maybe this short-term trend zone here. And yeah, it's a little bit of a ways away from it. So we are therefore prone to a little bit of a pullback before we start to, find the right candles and our feet again. But I do believe it's turned the corner with that. And the fact that this long-term trend zone is no longer offering dynamic resistance. It's starting to offer dynamic support, and the price action is good because we've got a nice solid increase through here. So I'm expecting this area here, the confluence of the old point of supply. There's your old POS acting as a POD, and the dynamic zone also kicking in around here to do that. And if you see the demand side buddies in there, then I'd happily go upon seeing those demand side buddies plus 1/3. But if you're already in it, then I'm happy holder because I think the trends are turning. So no problems there. Harajum. I'm going to skip your second one just in the interest of trying to get as many questions answered today as possible. IGL, let's do that one. Looks fine, no complaints. Happy holder here. Would I buy it? Look, I can't see why you wouldn't buy it. There's a bit of a shadow here. So yeah, there's a bit of supply there. Maybe there's a little bit of supply in this candle here. Look, let's just leave this one as a hold. If the candles turn back to the white side, then buying on the basis that this and this are fantastic. I know it's a bit sketchy. It's not the most liquid company out there. So price action can overlap, but this is a great consolidation zone through here, and it looks like we're breaking towards the top of it. So we can maybe go and have a look at $3. If you've got it, happy holder. If you don't, just keep an eye on it. There's probably going to be opportunities to add some risk to that one with the right candles. James asking, what is my top buy this week? I did a scan earlier on. This was the scan results. What were the best ones in here? I didn't do a shortlist of the shortlist, unfortunately. Let me see if anything rings a bell. I thought Woolworths looks half interesting. Wally Parsons, I thought looks very interesting. That's a nice chart. Look at that one. So James, answering your question, maybe that was my favorite one from that list. I thought Webjet looks very good, although it's pulling back a little bit there on today's candle. Trying to think if anything jumps out at me, reminding me that it's worth a look. You can see that. Anyhow, normally I would spend some time shortlisting the shortlist and then shortlisting that again, but I just haven't had a chance. I thought Accent looked pretty good as well. There you go. Those three maybe stand out. I thought Audinate started to look half interesting. I know that's been a really popular one in the past. Hasn't been for a while since it's been pulling back, but that one looking interesting. There's your top four, perhaps, James. Okay, Jimmy asking for ARU, which is on the Facebook list as well. So good to get that one out of the way. That's ADT. Hey, that's on. Look at that one. That's in my shortlist as well. Jogging my memory, I'm glad we accidentally ended up there. Where I meant to go is to ARU, which is this one here. And so if you don't know, if you haven't heard, Elon Musk, something about Tesla, go check it out. Not using as many rare earths to build magnets, okay? And you can't see that stuff coming, ladies and gentlemen. You have no idea. When you're looking at this and you're looking at this, you can't see what's coming next. You are going through the chart one day at a time, and all you can see is the candle that comes next, and you don't know what's going to happen when Elon Musk says something that's not good for your stock, right? So I think there's a reason to not hold the full position here. I don't think it's given you much reason before that, if any. I don't think it's given you any reason to be negative on this before what's just occurred. But because we are now lower peaks and lower troughs, okay, because some pretty nasty black candles have come in, I think your default measure here is just to go minus 1/3 as a precaution, and we're still happy to hold probably the other 2/3 at this stage, just on the basis that the long-term trend is still up, obviously. And we would be watching very closely here. So for other signs that we need to continue to exit. Yesterday's candle, pretty good. There's still some demand in the system, but I'm worried. I'm worried that this point of supply, this previous point of supply, might act as a point of demand. And if you see the supply side buddies in and around this area, that's when you would be very cautious again and go another minus 1/3. And certainly if I know we're looking way down the track now. If we were to see another point of supply putting there at the previous point of supply, what did I do there? Point of supply. I've done that the wrong way around. So let me move that one there. Some of you are probably screaming at your screens. The previous point of demand becomes a point of supply. So if we see at the previous point of demand, we do see that supply, the candles come down. We go minus 1/3 there. And then if we were to break beneath this trough low, this point of demand here, right, that would be your final exit for your minus 1/3. And then you're out of ARU. And hopefully you got in at a really good price, 20s, 30s, and you got out at 50 and your job's done and you're going to move on and you're going to keep living your life. Let's do, Barry's asking for Liontown, and letter L looks good. So not just Liontown, but LIN looks good too. No complaints there. Yeah, look, I like yesterday's candle. Today's candle, not so much, but a happy holder. Would I buy it? I can't see why not, assuming, Barry, you can make this work. It's just the reward to risk, isn't it? It's just getting reward to risk work on that. But I'm going to go hold. I'm not sure if I'm a buy on the reward to risk basis, but otherwise everything else is looking good and checking out. So 2 thumbs up on that one. And he's just he's promising me that they look good. This one does look good. Lindsay Australia, happy holder there. Today's candle's not ideal, let's face it, but one candle does not a reversal make, and it's not huge either. So let's see how that one goes, but a happy holder on that one. How are we going for time? We've just got 11, but I have done all the Zoom. Novonix, James just got in. NVX. Not yet, James. I'll keep moving. Not yet. You know what I need to see. We've done it a million times. So let us go back to the streamers, and I'll try and do some of yours as well. Mesoblast here. This one is for David. No, I can't. Sorry, David. It's just not there, is it? Long-term downtrend. The black candles. David, how do you get black candles? Forget me. Forget I exist. Forget everything. If you've been listening for an hour, everything I said, mate, I don't matter. Don't get me wrong. I don't matter. I know I'm a talking head on TV. Sometimes I say stuff that makes sense. Sometimes I don't. But at the end of the day, who cares what I think? David, seriously, if you own this stock, ask yourself, what does the market think? All those black candles, the only way that black candle can occur is if there's more supply than demand on the day, pushing it from its high open down to a low close. The only way you can have lower peaks and lower troughs, David, is if every time we try to rally, we get beaten back down by even more supply than last time. And when we hit those lows, we don't just stop at those lows because there's enough demand to stop us. We crash through those lows. There's too much supply. Lower peaks, lower troughs, David. Not a great sign. Trends in the long term don't look fantastic. So forget what I think about this one, David, and I want you to ask yourself, what does the market think about that? And therefore, what should you think about it? Because I think you'll do better if you can tune your brain into the market. Find that market frequency and just trade with it. Sol Pattinson is okay. The short-term uptrend, long-term uptrend. Price action is very overlappy. And this is the only problem that I've ever had with this. It's just very overlappy, isn't it? So it's not my cup of tea. If you've got it, hey, if you're a sucker for punishment, hold on to it. If you like pain, if you like to make money real fast, then this is probably not the right one for you, okay? Adonis. But Adonis, if you own this, I haven't said anything out of turn for Washington Sol H. Pattinson. I'm sure you agree wholeheartedly with everything I've just said. OBM from Andrew, wonderful. OraBanda, I've loved this for a long time. Hey, it's done everything it needs to do and it keeps doing it. Happy holder. Is this a sell day today, Andrew? I don't think it is. What do you think? I don't think it is. I think it's fine. Happy holder there. WBT. We should do this weekly. What did we say last week? We said on this lower shadow here, no reason to sell, but I would say, and we said, watch out. Well, there you go. I said supply. It was so important. I misspelled it just to get your attention. SUY supply side candles. And I said, watch out for them. And you got one. Okay. So eventually you got one. And the one I'm talking about is this one here. And when you see that, compulsory, do not pass go, do not collect $200. This is what you would do with it. I still think you should hold on to a bunch of stock in this case because this is so magnificent and so is this also. And then you really didn't have, since that's compulsory exit, you really haven't had a reason to do anything else. That candle's fine. No reason to continue to sell. That candle's fine. No reason to continue to sell. And that candle's fine. No reason to continue to sell. So I think I've been pretty good on this one, ladies and gentlemen. I think, to be honest, I've nailed this. I called it a buy just before Christmas. And every time it's come up, Ask the Expert / live market analysis, I've said, hang on to it, to be fair. And even there's your minus 1/3 and hang on to 2/3 and see how you go. There's nothing here that tells me to get out. But as we know, what could happen is we might see a point of supply come in here. So there's your point of, obviously there's your point of supply. And if we see the lower one in here and you see the wrong candles in there, then you go minus 130 again. If anything, I'm consistent, aren't I? And there might be some other opportunities after that, but we're going way too far down the track. I think I've got everything. I think I'd never do the chat. So let's do the chats quickly. TLX. Sorry, chatters. This is from Chantel. It's okay. I can get to a hold. I wish I had better something. I think you're probably wanting me to be really excited about it. It's very good. Don't get me wrong, but I'm just concerned about the supply in there. But hey, you know what? I can see plenty of demand down here as well. Plenty of demand. And, long-term trend is still up. Short-term trend's a bit indeterminate. The candles are very white. The price action's starting to get better again. Happy holder. Just watch how we go up here, Chantel. So if you start to see the supply side buddies coming in there, then we're a bit concerned, okay? If we hit that with a bunch of white candles, everything's hunky-dory. Hold on to it even harder, and then watch for an opportunity to buy. So the demand side buddies, a nice little higher trough maybe being set as well. But then, you've also got this as well. So always look up. Yeah, maybe it's just a hold. Maybe it's just a hold then. I'm not sure if you're adding because you've still got a fair bit of supply up there to deal with. IGL, I've done that one. TLG, TLX, TLG, there we go. No, this one, which again was looking really good. We talked about this one last week as well. No, I'm sure I told you last week that it's a scale out. It's a manage your exit sort of thing. Has that changed? Not really. I still think you're more managing your exits than trying to buy a dip and a bargain here. I'm not seeing the market see that as a bargain just yet. I'm done. I've answered everybody's questions except for a few Facebookers. Apologies for that, Facebookers. But if you're watching this at a recording, make sure you register for the sessions, and that gets you on board. Let us head over to here now and just remind everybody how to register. www.thinkmarkets.com/au/webinar. I go Tuesdays for your ASX portfolio. I go Thursdays for your foreign exchange, your crypto, your commodities, your indices, all of the key macro stuff you want to trade. And then on Fridays, note the time change, 12 p.m, I do your USA portfolios. Hey, I'm not sure if I could do any more for you, but if you have any ideas, let me know, because we are the good guys in the Australian broking scene. There is a reason why I Think Markets pays me the big bucks to come here and speak to you. It's to help you be better traders, help you to be better investors, because that's always good for our clients. And we'd love you to come on board with your self-managed super fund, $8 flat rate trades, HIN and CHESS sponsored. And also if you're trading CFDs, we are the best in the business. We've got the best rates. We're commission free on shares. We've got the best platforms, and that's why we keep winning the awards. And I think the best thing out of everything, and certainly worth paying a little bit more for your CHESS sponsored trading there, is your dedicated account manager with 24/7 customer support. And I dare you to try and find the contact us a phone number on your current discount broker, right? And you will have to search and Google just to find their phone number so you can call them, because they don't want you to call them. Go to our contact us session, and there is the phone number there. If you've got a problem, don't muck around with your chat bots that ask you 36 questions to try and see what the human eventually that gets to you will talk to you about. Just call us up and we'll get that problem sorted out quick smart. That's why we're the best in the business. If you're watching me on any of the streaming channels, please hit the subscribe button to stay notified of any of my future updates. I go live regularly during the week. And of course, hit the like button because it helps us know that you like what we're doing so we can continue to do more of it. Apart from that, everybody, it's been a pleasure chatting with you today. All the best for your trading and investing until we catch up again. But don't forget, there is a disclaimer that needs to be mentioned. Everything we've talked about today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general advice, consider it carefully or seek the help of a financial professional. You can learn all about Think Markets and all of our products by downloading our product disclosure statement, our PDS, from our website.